What Tim was alluding to is when Bitcoin is running and all of these convertible bond dealers are like, oh yeah, we'll give you this and we'll give you that. And Strategy, because they were the biggest and the first and the most trusted, always had access to that capital. And they could go and get those deals done today, maybe not as favorable as they could in other environments, but there's no way that these deals are turning down Strategy. Like Strategy's turning them down, right? But some of the smaller players, maybe the convertible bond deals are just not that great. And now Strategy and Strive are vertically integrated, right? So they can literally just go to the market and say, we want to raise some capital to buy Bitcoin. Is 13% enough? Or is 11.5% enough? And over the next 30 days, if the weighted average says no, they'll just bump it up 50 basis points. And then the market at some point will say, perfect, we'll peg you at par for this price.
What's up, everybody? Tyler Rowe here. I'm here with Soleil and Tim Kotzman. We were just talking, guys, a little bit of reminiscing about some of the early days of True North. So how long has True North been going on?
60 something episodes, but I don't know how many weeks that is.
Yeah, it's got to be coming on 2 years, right?
Yeah, there were a few weeks that were skipped. So yeah, all the way back to Quant Bros and then True North. And we were reminiscing about when Dylan LeClaire was part of True North. I mean, that's going back basically to the beginning, right, Soleil?
Yeah, and he'd show up on those podcasts. It must have been like 2 a.m. for him, whatever his time zone was. And you're like, oh, he must have just woke up. But I think that's just his hairstyle. So he, he's forward looking with that.
He is. That's good stuff. Yeah. Can we get into the genesis of True North a little bit? Yeah, like how did you guys get connected with, I guess, with Jeff to begin with, and how did all that magic happen?
Soleil, do you want me to start and then you can correct all of the things that are not factually accurate?
Yeah. Well, you start, and then I'll just embellish with a bunch of things that are even less true than whatever you say.
I just remember Grain of Salt, who, shout out, by the way, literally orange pilled me. He reached out to me, he said, hey, you should jump on a Zoom call with some of these guys I've met on Twitter. And I'm like, okay. I was doing some consulting work up in Massachusetts. So I'm like in the parking lot of a Holiday Inn in my car. And I'm like, jump on this Zoom call. And it's like all these guys just talking about numbers and this and that. And like maybe halfway or 3/4 of the way through the call, maybe not even on the call. Maybe it was like the next day or a week later. I looked back to on that call and I thought, holy crap, I was on a call with Ben Workman. I was like, how did that happen? So Grain of Salt is like one of the master connectors in the industry. And these internal, like, it really did start as an internal call. And then Jeff put this literally manifesto together. And I remember like reading it and telling like close friends, like, I think this is going to be a really big deal. I think it's really important to like have like the correct information going out. And like, I almost got chills. Like, I was like, this is going to be something. Like, I just think it's important in the same way that Bitcoin is important. I thought this is not just another podcast. And Jeff said, here's this manifesto, reply via email if you're in. And everyone's like, I'm in. That's my TLDR. I'm not going to go on for an hour about it. Over to you, Soleil.
So I had done, I don't know if it was 100 episodes or something, but I'm just plugging along and nobody's watching the show. And at some point, I covered Quant Bros 1. And up until that point, I'm just an option seller. So I literally can't conceive of a stock where I think it has upside, that I would just be like, oh yeah, I would just hold this and it would go up and it would do better than what I can do just, scraping some premiums up. And when I saw what it could become, I was like, holy crap, this isn't just like, oh, a leveraged Bitcoin play. And so that kind of blew my mind. And I covered that episode. And then I believe, I don't know, I might have had 500 followers or something. And Jeff retweeted it. And, I woke up the next day, I think I had like 1,000 followers or something. And then over the course of the next week, my account was just getting much more attention. And, I just kept covering it from that point. And I guess, covering it that much, got a little bit of notice. And, Jeff sent out this message to, I think it was like 12 of us or something, and said, hey, here's a group of people that are all in the space and, knowledgeable, pumping out content. And, like Tim said, we want to be able to sift through all of this noise and junk, because he was remembering back when what happened with GameStop, and there was just so much craziness and you couldn't really tell what was true or not. And he thought that there was definitely going to be some value to people who are, paying attention and telling the truth amidst a bunch of kind of like hype. There's going to be a bunch of people that are going to be attracted to the space just because of number go up, and a lot of bad information out there. And so he wanted to put that group together. And I just remember being absolutely terrified, because like there was a lot of alpha in that group. And when I say, I don't just mean alpha like information, I mean like alpha personalities too. You know what I mean? Like alpha male friggin' list there. And I'm looking at like Josh Mandel and I'm like, holy shit, they're bringing me in here to talk about covered calls, but this guy's like super trader. I'm like, what do I possibly have to offer, this group? And, and Ben just is talking all up and down about convertible bonds. But over the course of time, you start to just like learn about these things kind of through osmosis by, rubbing elbows with these guys, and then having to go and do the work so that you don't look like an idiot. When you talk about some things, you actually have to get yourself, up to speed. And so it helped me a lot to have a broader understanding and go out there and do the work so that I don't feel kind of dwarfed by these, exceptional voices.
Yeah, that's really cool. I remember when I first discovered True North, like I had missed a bit of the early phase, and I have kind of like a love-hate relationship, on again, off again relationship with X, and I wasn't spending a
Mm.
lot of time on X, but I was like super interested in the MSTR trade at the time, and I talk about it with some of my friends, and then um one of my friends found your streams weekly on Wednesdays and shared it with our in a group chat, and I was like, what, like, this would have been useful to have known about earlier. So it was super cool to like track what you guys were doing, and like you said, so much alpha from that group. I think it's cool to hear that story about like how Jeff learned from the whole GameStop situation and wanted to provide you know true alpha internally, and then broadcasting that externally to the broader community was so cool. And ever since I discovered True North, it's just been the greatest theater entertainment, and providing a lot of high signal, as well as all of us kind of think through this investment in what MSTR has built. And now to see that kind of branching out, we've got Strive offering a preferred equity. You guys covered it live when Strategy launched STRF, STRD, and the other preferreds, and eventually landed on their iPhone moment with Stretch. And it's just been cool to like have someone like your crew kind of indexing it, and providing so much feedback to the community. I think communities around equities like this, just like the Bitcoin community, it mirrors it in a lot of ways. The broader Bitcoin community is like so essential to helping drive narratives, and like Michael Saylor has watched numerous episodes of your guys' stream. He's amplified your stream, right? So it's like the learning ecosystem that is kind of built around this community, and to see how it's expanded over the last year and a half, 2 years, is just crazy, and like you think ahead, now Tim, you guys have the hurdle rate pod, Soleil, you've got a lot of exposure on your channel, and like what's going to come in the next 10 years, right? We saw an explosion of Bitcoin treasury companies that were following the Saylor playbook, and I'm just excited to see, what the next products are in this space, and how we continue to build. So
Yeah,
yeah.
it was funny when you said this, different prefs and products were coming out. And you know how like somebody will say, "Oh, I remember where I was when this song came out," or, something like that. I remember where I was when STRD came out, because I had already like gotten myself to, I thought was at least a reasonable understanding of the convertible bonds. And it was like, oh, now we're pivoting from convertible bonds and we're doing this pref thing. And they came out with STRF. It's like, okay, I get it. They came out with STRK. I was like, all right, I get it. It's different. And I was sitting in the airport when I saw that they came out with STRD. And of course, I have nothing to do for an hour and a half, but wait. And I'm just like reading and trying to figure this out. And my wife's like, "What are you doing? Like, what are you so, into?" And I'm like, "This thing just came out and I'm going to have to talk about it in 3 days. Like, I have to understand this like right now." It was just kind of funny how your life changes, and like that would have never like even registered on my radar as an option seller. I just don't care about any of those things. But it's been fun to track.
Yeah, absolutely. So let's kind of jump into some of the recent news. Like the big thing is Strive, paying daily dividends that finally started this week, and the response from the market has been huge. Like our tracking, our estimator has SATA over the first 2 days of daily dividends, probably funding enough money to purchase 400 or so Bitcoin. Like, do you think there's like just like some initial interest that's coming in, and that's why volumes have been so high? They traded, I think, almost $100 million on SATA yesterday. Is this something that's sustainable, or do you think the move to daily dividends is a bit of an event in and of itself?
I'll jump in. I have no idea, first of all. Secondly, if I had to guess, I'd say a little of both. Like, yes, it is an event because it's brand new. And so you have that initial event and that initial interest. But, and Jeff said this, I'm not, that smart, but he said, then you have someone that can just dip their toe in. They could just say, all right, well, maybe just for one day and then see how that goes. Right. And if you do one day and you get the dividend, maybe you do 2 days, maybe you do 3 days, and it just creates that optionality. Uh, I think we all see the commentary on social media around people saying whether it's true or not, money coming out of Stretch and into SATA. Well, if it's paying more and it's pegging to par, I mean, what's there to complain about? I mean, it's pretty good market reaction to them going to daily. So maybe a little bit of both. And I mean, could probably do a whole 90 minutes just on the top 10 reasons why daily dividends are going to change the world. But yeah, I'll stop there.
Yeah, I think there's two main reasons that I can think about. Is the first is you're kind of getting rid of the tourists. You remember when Eve said at the last conference, it was like, it kind of felt good to be at a conference during the bear when it was just serious people that were in attendance. Like the tourists were gone, right? The people who FOMO'd in at the top, they're wiped out. They can't be bothered anymore. They're just nursing their crippling depression or whatever. But and so that's kind of like what you had with the monthlies, and to a lesser extent, it's going to benefit Stretch to do the twice a month thing, because you're incentivizing the tourists to go somewhere else, right? So the people who just want to sneak in, grab the dividend and leave, those people are going to be incentivized to stay in, or just, go find something else. Like if you don't want to park your money here for at least, it's supposed to be a short-term thing, right? This isn't like It's not like, oh, park all your money into these prefs for 25 years. That's a Bitcoin thing, right? But you don't want people holding the stock for 2 days, 48 hours, and just grab the dividend and beat feet. So I think it's incentivizing people who like the product to buy it and stay in it. But it's also, number two, it's disincentivizing the shorts, because you literally can't hold Stretch without paying the dividend. You're carrying it every single day. Whereas, and I even did this myself with Stretch, I shorted it for a couple of weeks and used that extra buying power to trade my weekly options. And I actually I actually screwed it up because I forgot when X dividend date was, so I ended up paying the dividend because I was short Stretch that one day. But if you're a billion-dollar hedge firm, you're not going to be airheaded like me and forget what day it is. So those guys can just short the stock and then dump it, right before they have to pay that dividend. Or they could probably have kind of calculations in there too, of like, oh, well, if we hold it over the dividend and we get paid the dividend, and we get paid the 1%, right? And if the stock doesn't drop by that 1%, we can still dump it. And so there's all these games that those big money players can play when you have once or even twice a month dividends paying out. But if you have a record date every single day, it like how are they gonna jump in and out of those short positions? So I think for both of those reasons, it should help SATA stay closer to par.
The volumes have been crazy to watch. It's like tens of millions of volumes came in like the last couple minutes of trading yesterday on SATA, as people pile in right before, the 4 p.m. market close. And yeah, I'm curious to see like some of the advanced trading strategies that people employ. And, I was looking through like news, scouring for news, and like this still hasn't been picked up by a lot of major news outlets. And it's just a matter of time, right? Until there's more eyeballs on this. And, once MSNBC or CNBC starts covering this more, like your Bloombergs, Matt Cole's going to do the rounds, at some point. And this is a legendary product. I didn't think it was possible, covering the space for this to happen. I kind of took like, cause Saylor had, and Fong talked about, it's like, oh, semi-monthly is the best we can do right now. The markets aren't set up for for anything more frequent than that. And Matt and the
Yeah, I
team,
assumed that was true,
right?
but
Matt and the
it was
team were
just
like,
everybody thought it was true.
well, too bad. We're doing this thing. And it sounds like NASDAQ was like fully on board to, make this happen. And yeah, I'm sure there's some extra expense for the, the record keeping for all shareholders and all that. But like, what a genius marketing move. What kind of flawless execution. And I shouldn't be surprised, that, Ben, Jeff, Matt, the whole team over there, Logan, those guys were able to just like deliver this thing. And, to see like nobody out there is paying monthly dividends hardly, right? There's a handful of companies that even pay monthly dividends. And, yeah, to see them go to daily, it's just like, this is really like a 0 to 1 moment. And
Yeah.
yeah, just
And will they even really have more expenses, because they can just put an AI agent in charge of filing it every day?
you're
Like, I'm
right.
sure,
It's going to get a lot
like
cheaper.
right now, Ben Workman's over there typing a TLDR post, like 17-page post, firing it off to the NASDAQ, or I don't know who the hell have to file it with, but that'll all be automated, and it's just
You're right.
nobody will even have to think about it.
Yeah, I was reading through some Josh Mandel posts and comments yesterday. I don't know if it was maybe posted a day or two ago, and Josh or someone that commented on his thread asked if there were, additional costs, significant, or notable additional costs, and Ben Workman responded and said there are not any, significant additional costs. Primarily the additional cost is additional wire fees. So I thought that was interesting.
Yeah, that is interesting. I missed that thread. So that's really good. Like, because that was an initial reaction. Like you said, Soleil, it sounds like probably technology is already solving that issue, where it's not
Yeah.
a big deal.
And I only paid $25 for a wire with USAA, so I'm sure it's not a big cost.
Yeah, absolutely. How quickly, realistically, is it, before strategy um, really follows suit here? They're domiciled in a different jurisdiction. I think they're a Delaware company. So they might have to make some changes there to get this approved more swiftly. But obviously they're more conservative with how they move. They're a larger company. They've kind of got a bigger stack at risk, and where they attract larger pools of capital. I think they can be a little bit slower to move on these things than someone disrupting like Strive. But I mean, with the response of people rotating, as has been speculated, like you said, Tim, into SATA from Stretch, there's probably a lot of retail there, and just the value add that daily dividends, offer. Do you think it's realistic we see strategy get to daily dividends or a more frequent payment within the year?
I thought it made sense when Saylor said it is constructive to see both versions in the market and see almost like an A/B test how that's going to perform in the market. I think it's interesting that last week, Strategy bought $100 million worth of Bitcoin and increased their USD reserve by $100 million. And, correct me if I'm wrong, I don't think that really came from Stretch.
Right.
So,
Not at all.
I think there's a lot of nuance. I haven't watched it, but I've seen some of the clips that Natalie has thrown up from her most recent interview with Michael in Prague, and it looks like he really goes into the nuance of, accretive, dilutive, short-term, long-term. Like, this is a long-term game, and we can sit here for another 90 minutes and talk about MNAV and accretive, dilutive. Pick one or pick both, and have this word salad and like deep financial discussion. But I think that there really is a difference without getting into it, all of it, right, Tyler? All of it. Of, are you here for a day? Great, go to SATA. Are you here for a week, a month, a year? Are you here for the revolution? I mean, there's just different time frames, and I'm glad that this is becoming the narrative and the discussion. I mean, I find it hard to believe that digital credit isn't the biggest thing and the biggest innovation in Bitcoin in a long time. And that doesn't take anything away from anything else. And it doesn't mean everybody has to do digital credit. But the fact that, could Strategy still buy? I mean, we're in like arguably the bottom of the bear. Could Strategy arguably buy just as much with SATA or Stretch rather, just being pinned for a few days a month? Maybe. And what happens when you're not at the bottom of the bear and you're just at $100,000, $110,000? What if it's pegged there every day anyways? So we haven't seen this stuff in a bull market. I'll stop there. I'm getting too excited.
Yeah, I mean, strategy is not used to being in the position where they can just watch someone else take a risk and see if it works. Like, strategy is usually what is it, in the bicyclist at the front, just getting all of the wind in his face and everybody's just drafting behind him. And so it's going to be valuable for them to watch. And if this works for 3 months, 6 months, for a long period of time, that gives them the confidence that maybe they should do it as well. But you're right. I can't remember which one of y'all said it, but based on the fact that they're in Delaware, they would have to get this through another vote. And so, like, Fong Lee was hounding me in my text messages just constantly. Did you vote? Did you vote? Did you vote? And finally I relented and I was like, Jesus, get off my back, dude. And, they're going to have to go through that whole campaign again. I think it would probably pass. But yeah, it's kind of an advantage for them this time that they get to just kind of sit back and relax and watch it work. But if SATA for some reason struggles to stick to par and they have to pump their yield, their returns up to 15, 16% or something, then maybe they wouldn't do it. They'd be like, oh, there were unintended consequences that we didn't see coming. And, then they can say, no, the twice a month is really where it's at, and maybe like you said, they're selling, or they're buying a ton of Bitcoin 2 days a month, and that's as better than going through the trouble of going to the dailies. But I think they eventually get there. The fact that Saylor alluded to the fact that he wanted to do it and was kind of told that they couldn't makes you think, oh yeah, he definitely wants to make this happen. And so I think if SATA proves itself that it's working, they'll go in the same direction.
Yeah. Yeah, I think so. I was talking on a stream with some of the guys from One Chair and Chase Palmieri yesterday about how these products are going to be for a long time just so intricately linked to each other, SATA and Stretch. And, you know, because of the credit risk profile that each company has, Strategy's got 850,000 or so Bitcoin. Strive's been able to add a ton, multiples of their balance sheet over the last few months since going public, and they're a sneaky dark horse to move, into the number 2 position in terms of total Bitcoin treasury size behind Strategy in I think over the next year or two. But we were talking about how, like, if Saylor increases the dividend, and of course he can only increase or decrease it 25 bips a month. But as Saylor increases the dividend to make STRC more attractive, if it's not hitting par, if that volume weighted average price isn't being hit above $99 in a month, do you think that capital will just rotate back into STRC from SATA because Strive is a bit of a higher credit risk? They're a smaller company. They've got, just a fraction of the Bitcoin Strategy has. Yes, they have no debt, a cleaner balance sheet, a more straightforward balance sheet. But is it true in your mind, at least, over the near term, that SATA is just going to have to trade it at some sort of premium to STRC in order to keep attracting capital? Am I off base there? Like, are they going to be, is Matt and team's hand going to be forced, if Saylor increases his dividend rate enough that they're going to have to also in turn increase their dividend? What do you think, Soleil?
I think there's a threshold for the volume, because I think you mentioned that SATA's volume was picking up, but there's no way it could be anywhere near what Strategy's volume is. So there's almost like a speed limit sign, right, for the different companies, because when you've got 800,000 Bitcoin, you can safely, that's like, sarcastic air quotes, there's no such thing as safe in the stock market, but you can more safely issue more pref on a larger Bitcoin stack, right? And I don't think, even if even if SATA is a complete smash compared to Stretch, it's still going to be relative in size. So I don't think anybody sees a scenario where, like, Strive ends up with more Bitcoin than Strategy, right? I don't know. Maybe in 175 years after I'm long dead, if some weird things were to come together to make that happen. But yeah, there's still kind of a threshold at which those products can be offered to large institutions, right? So I don't see SATA being able to be offered, anytime soon to someone that just wants to buy, I don't know, tens of billions of dollars of the product. It would probably be a little bit more than Strive's Bitcoin balance sheet can handle. And I haven't really thought or looked at the numbers, but there's a certain limit based on your volume, your daily volume. There's only so much prefs you can ATM, and there's just so much of your common that you can ATM to balance it. Because once you acquire a certain amount of Bitcoin and prefs, you start to get your amplification ratio a little bit too high, and now you kind of have to ATM the common in order to balance out that ratio. So I'm sure they're in the back room cooking and figuring out what ratio of this to that they have to sell. But the scales are going to be very different for quite a long time, I think.
Yeah, I that's something I wonder about a lot is, what kind of amplification ratio is realistic, and it's going to be a long time before we really figure out what that right, balance is.
Hmm.
Right now, Strive's at 60% amplification. I think Saylor said they're going to target what, 30 to 40% maybe as a max. That's
Until Bitcoin's volatility drops, maybe, I think
yeah.
something along those lines.
Yeah, yeah. So I mean, I think there's a lot of room to run, right? Um, the because the addressable market on on digital credit products, these prefs that pay the dividends, I think is just massive. And if the capital is there and the demand is there for these types of products, I can see there's traditional banks out there that have leverage ratios of over 100%. So, and they're
Yeah.
they're doing all right. Maybe
Yeah, I
they get.
trust Dan Hillary's opinion on such matters, and I think he's changed his opinion slightly over the last month or two. His most recent video, he said something along the lines of he's reconsidering whether he's as nervous as he previously was if amplification ratios were to exceed about 50 to 60%. I think around a month ago, he had said something along the lines of he would start getting nervous if amplification was over 60. And I think that's probably relative to where we are in the bear bull cycle. Because if you're at 30 at all-time highs and then we crash 50%, you could be slammed into 60. And so that seems reasonable. But I think anybody that's been in Bitcoin for at least one cycle kind of figures we're at or near the bottom, right? So to imagine that we would drop 50% from here, anything is always possible, but I'm not terribly, I guess, worried that Strive is at 60% at these levels. If they were at 60% and almost kind of like FOMOing in at all-time highs, then we crash 50%. Now they're at 120% amplification. That would be potentially, butt clenching. But I think for now it's fine. Those ratios are fine.
I mean, good thing I'm not in charge of one of these. I'm not the investment officer at a Bitcoin treasury company because, man, like Tim, you alluded to, in a bull market for Bitcoin, these products are going to be just fine. Nobody's going to be talking about how they're going to blow up in any way, and I would sure be tempted to juice my amplification ratio as much as the market could withstand. But that's why I'm not in risk management. So,
Well,
yeah.
Yeah. Go ahead, Tim.
Tyler, you guys at BitcoinTreasuries.net just put up a clip a few hours ago of, the interview I did with Jesse and Andrew Webley. Andrew, in the clip literally said he's not sure why more Bitcoin treasury companies are not increasing their amplification in this market. So I guess would be they're stuck. They just have to kind of sit on their hands and wait. Um, I don't know if it's this exact reason, but in the convertible bond days, people kept yelling, why is Saylor only buying the top? It's like, well, that's when you had access to the capital markets. So you work with the market you have, not the market you want.
Yeah, that's a great point because now they have access to capital at the exact price that the market will provide on a daily basis, right? So, you know, what Tim was alluding to is when Bitcoin is running and all of these convertible bond dealers are like, "Oh yeah, we'll give you this and we'll give you that." And Strategy, because they were the biggest and the first and the most trusted, they always had access to that capital and they could go and get those deals done today, maybe not as favorable as they could in other environments, but there's no way that these deals are turning down Strategy. Like Strategy's turning them down, right? But some of the smaller players, maybe the convertible bond deals are just not that great, um, and the smaller companies have to play wait and see for better terms. But now Strategy and Strive are vertically integrated, right? So they can literally just go to the market and say, we want to raise some capital to buy Bitcoin. Is 13% enough, or is 11.5% enough? And over the next 30 days, if the weighted average says no, they'll just bump it up 50 basis points. And then the market at some point will say, perfect, we'll peg you at par for this price. So it's as far as a free market maximalist, which I consider myself to be, I love the fact that the market gets to decide the cost of capital and not convertible bond dealers who may or may not have well, may have as being too generous. They definitely don't have the shareholders' best interests at mind. Like they're there to arbit and trade around gamma and all of those other things. So uh, clipping them out of the deals, I think, is a better for the shareholders long term. And so I just really like the free market dynamics of it.
Yeah, I think you're right. In a bull market for Bitcoin, that's just like a great opportunity to reduce the cost of capital, right? If you know if these products are trading at par and they're continually ATMing them, well, that's an opportunity to, yes, maybe not amplify as much as possible and reduce your preferred equity, rate by 25 bits for, several successive months. Like that just makes sense. And I think, when they're looking at the long-term risk factor, it's like, oh yeah, if we can reduce our cost of capital here, yes, we'll leave some money on the table that could otherwise be used to buy Bitcoin. But if we can lower that interest rate, I think they'll seize that opportunity, right? We haven't seen that happen yet. These products are still new. We haven't been through that bull market.
Yeah, that's a good point because right now it's been seen as okay. And it kind of goes back to what I was saying about the speed limit. So if the prefs became so attractive at the existing interest rates that they literally just can't ATM it enough. You know what I mean? Like, okay, based on our trading volume, we're buying as much Bitcoin as we can stand, but the market actually wants to bid up the prefs even more than we can handle. Then that just justifies them lowering the rates. So people are saying, oh, the rates are going to keep going up forever, but I don't think that's a foregone conclusion. As Bitcoin's volatility drops and maybe the CAGR drops, and they don't necessarily have to lower the rate just because the Fed lowers rates, but it should make the products that the prefs are competing with less desirable. And, more money would just flood into the prefs, which means that if the Fed rate comes down, then conceivably the prefs should be able to come down. And then that makes their cost of capital go down as well. So I think the prefs interest rates do go down 5-10 years from now, maybe gradually. So that's good news for common shareholders as well.
Yeah, absolutely. We talked a little bit about this, capital markets environment last week, Tim, and I know you guys talked about it on the hurdle rate as well this week. And SpaceX, their IPO has just been sucking so much of the air out of the room. So much money is rotating into that. We've got funding rounds from a bunch of secondary AI companies in private markets that are attracting capital. OpenAI and Anthropic are gearing up for IPOs probably on the back half of this year, maybe the Q1, Q2 of 27. But like, yeah, there's so much else going on in the marketplace that, I think that's obviously part of why Bitcoin, is sitting where it is. Yes, we've had sell-offs because of, Bitcoin has deeper liquidity than it's ever had. So, people are taking money off the table for the first time in real size. But, I think some of that capital rotation definitely played into this, price crash and kind of stalling out. It, when I see Google raised some 60, 70, 80 billion dollars to basically, they're already sitting on a couple $100 billion in cash. And people like Peter Thiel were criticized them for years for just sitting on cash. Why aren't you, he didn't have the Bitcoiner perspective of, hey, you should treasury this better store of value asset, but he's like, how can you deploy this money to grow your operating business? And so we saw now finally these companies are finding ways to deploy that into compute data centers, silicon and all of that. And NVIDIA also announced a raise of $25 billion in bonds. They haven't raised money for 5 years. And they raised money. I'm looking at the numbers. They raised some of their bonds last till 2056. So that's a 30-year bond.
Mm.
It's like they're doing what the US government does and building out that, different tranches of maturity. And NVIDIA doesn't even really necessarily need the money. Yeah, they need some cash for what they're going to deploy, but I see it as they're just out there raising money when they can. The price is right, the timing's right. Their 30-year bonds priced less than 100 bips over the US Treasury 30-year bond. So I mean, like, that's just like incredible that they're being priced as a risk barely more risky than the US government. And people are flooding into that because they want to fund NVIDIA debt for 30 years. That's just crazy to me. And yeah, I mean, some of the consequences of that, again, strategy's still been able to raise money through this bear market. So once capital rotates into Bitcoin again, yeah, it's going to be bananas. And seeing these companies raise for so long, like that just makes me optimistic that strategy is going to be able to iterate on this thing too, right? And eventually do some of the same type of long-term debt financing at really, really inexpensive rates. Imagine paying 6%, 5% on a 30-year bond for strategy where they just buy a massive amount of Bitcoin, right?
Yeah, that would be wild returns. But yeah, I can't conceive of a scenario where I would put my money into something for 30 years that has disruption risk. I mean, we've said this before that Bitcoin is the only asset that can't be disrupted, right? So NVIDIA could have an upstart company make better chips. I think Tesla wants so many chips that like NVIDIA can't even keep up. They're gonna start making their own chips. I mean, Elon's come right out and said, we're gonna make more chips than everyone. And so, and that's not even that's not even looking at the global macro. Like China wants to freaking invade. Like what happens to NVIDIA stock then? Like there's so many disruption risks with anybody that's like offering a products and stacking cash. But if you're selling products and stacking Bitcoin, at least the balance sheet can't be disrupted. You know that long-term value is going to be there.
Yeah, there's certainly disruption risk, but I do wonder, and this kind of ventures a little bit away from the Bitcoin conversation, but how like Balaji Srinivasan's kind of, posited his thesis that, these internet native companies, um, and Bitcoin. He has a thesis on Bitcoin too, but they're kind of replacing state functions. Like Bitcoin's kind of like
Hmm.
an alternative to the central bank, and Balaji would probably argue that like a company like NVIDIA is like replacing the property rights culture that ordinarily fell to the United States government. So I almost view like these mega cap companies. Yes, they're able to be disrupted, but I think the scale they have and how entrenched they are into the modern economy makes them just like Teflon. Like they're
Mm.
I think they're impenetrable, and I think they are like where would you rather be investing your money in like the like into Germany's treasury market or into Nvidia? Like I almost think like these big companies are, you know, a bit of a safer
Well,
risk long term.
now Balaji also has said that he thinks that since World War II, I think it was World War II, the history of the world has been going in reverse. So if that's the case, then Germany and Japan lost World War II. That means they win over the next 50 to 100 years, right? If we're just playing that out in reverse. So I don't know. Germany's bonds might do better than NVIDIA,
Maybe.
but I'm
Guys,
not buying any.
all of this reminds me of Jeff Walton's tweet from 12 hours ago. Liquidity is the moat in modern finance. If you have liquidity and trading volume, then your strategy, your strive, um, I mean, the question I've asked in private is when the Bitcoin price goes up, does that raise all these ships back up? And from a lot of very well-respected people in the space have widely different answers from no, the stock is dead. Like it's now a Bitcoin treasury zombie stock. It's not going back up to, yeah, it's going to raise up all the boats and it might be jagged, but everybody will go to the moon together. And maybe there's 100 different nuances between just thinking of the treasury side, the balance sheet side versus, what's going on in the existing operating company, or, do some of these companies pivot into something that's growth oriented? Dare I say the two letters AI? So, yeah, I mean, I think there was some chatter, I don't know if it was public or not, of some of the European Bitcoin treasury companies maybe getting together to do a pref, like collectively to try to get, some of those, positives in play, liquidity, trading volume. I don't think that's happening, but it does, in these moments when I'm driving or taking a shower, it's like, what innovative things have not been thought of yet, where like, could there be, right? We hear in finance, like dark pools, like this big, scary negative thing. What if there was a light pool, a Bitcoin pool where, some of these companies could have liquidity, create liquidity somehow through some innovative method? That was, my brainstorm this morning, for what it's worth.
Yeah.
Yeah, that's an interesting idea because Strive had to do that similar deal to get enough Bitcoin to do the prefs. So it was this series of catalysts that allowed them to do that. And them pooling their Bitcoin, like individually, they're not large enough maybe to offer a pref, but together they could. That's actually kind of a cool idea. But going back to what you mentioned about the liquidity, that is a little something that scares me with some of the DeFi products built on top of the prefs. If you saw the recent it wasn't really, I guess it was an interview with Apex and Jeff, and Apex had to update basically their products are gated, right? So you can get into the product, but you can't just get out of the product immediately. And excuse me. And that's to make sure that if there's too much of a rush for the exit, that the people who like you don't want to have the bag holders get stuck when everyone else has exited and knocked the prices down. And I think that's the danger, is when some of these products become leveraged and looped on top of these products. That just makes me a little bit nervous. And anything that's touching Ethereum also makes me extremely nervous. So like the what's that? Yeah, exactly. And it's the hack risk for something like Ethereum is infinitely greater than anything built on Bitcoin, right? I mean, it's literally been hacked before, and they had to frickin' go back and basically reorg the blockchain in order to reverse that hack. And so things that are built on Bitcoin, I feel much better about. But as you start to build on top and on top and on top, everything starts to be a little bit more unsteady. And so I will say that I know Sailor's backed off, like, oh, my retweets are not endorsements. But like,
these are
come on.
notifications, Soleil. These are just
Yeah, this is just like, yeah. But who has ever hoped that when they posted something, Michael Saylor would notify everyone of it, right? Like, no, you want a retweet. You want him to have looked at your tweet and been like, yeah, that's a banger, fire freaking tweet. I'm gonna, retweet it. That's an endorsement to the network, right? Like I think
it's
that's
just a
legal speak. He
notification.
has to jump through those hoops or whatever. But come on, like, everybody knows you don't retweet something that you don't like unless you quote tweet it and say this sucks. You know what I mean? Like, he said that if I endorse it, I'll say so. Like, no, when you hate it, you say so. Like, you know what I mean? When you just retweet it, like, everybody knows you liked it. So,
I'll
he
take
probably had to do that for the lawyers or whatever. But
I'll take the other side of
it's
both of those. Well, I'll let you.
yeah, go ahead.
I feel like Kanye over here. I'm gonna let you finish.
But Saylor had
um,
the greatest
Kanye,
retweet of all time.
yeah,
Yeah,
yeah.
yeah.
I'll
Go
take the
ahead,
other
Kanye
side of
Kotzman.
the recommendation versus notification. If you're just reposting something, I could see that as a notification because you're not adding commentary to it. You're not saying that I like this. You're not saying that I don't like it. On building on Bitcoin, which with a lot of my tweets these days, I'm trying to meme it into existence. I think it's already there from a lot of different people in the community of like build on Bitcoin. I think that's a net positive, anything built on Bitcoin. And I would like nothing more than the entire narrative and news cycle to revolve around things doing really well and blowing up, but all of them are built on Bitcoin. I mean, that's just building the Bitcoin ecosystem. And if you run some other spreadsheet that can get hacked on top of Bitcoin, then maybe that's part of the story. And it's bringing the entire crypto community together around Bitcoin, and which just underlies and raises up the thesis of like everything's good for Bitcoin. If there's a way to bring this all together, and it's Bitcoin, it's stable coins, and it's crypto built on top of Bitcoin, I think that's more constructive than some prior cycles.
Yeah, no, I gotta agree with that, Tim, because it's almost kind of like the good news for the bears is that everybody who mishandles their Bitcoin gets wrecked. So if you're looping DeFi and you get wrecked, then you go, oh, I should have just owned Bitcoin. And then now you're a Bitcoiner. You know what I mean? Like you kind of, you can't be a diamond hands hodler if you don't go through the fires of the bear markets and the struggle. And like, I probably lost 75% of my Bitcoin trading in and out of Ethereum back in, I don't know, between 2017 and 2019, right? I thought, oh, when this one goes up, I'll buy this one. And when this one goes up, I'll sell that one and buy the other one. And if I had just hodled Bitcoin, I probably could have retired 5 years before strategies in 2024 pumped my bags. But yeah, so but maybe that's the a little bit of bitterness that I hold in my heart for Ethereum in particular, because I think about how much of my wealth I lost with that, basically shitcoin rugging coin. And so now all these DeFi products that are built on those rails for me has an emotional, personal loss to it. And so, maybe I'm just a little butthurt about it.
When you play stupid games, you can win stupid prizes. Oh,
Yeah,
sorry.
everybody.
When you play dumb games, you can win dumb prizes. That's good.
Yeah, everybody gets Bitcoin at the price they deserve, but everybody loses their Bitcoin at the price they deserve too, right? If you screw up and don't respect it.
Yeah. Yeah. I think about, like Sailor amplifying, tweets. Tim, you said something that really resonated with me. Like this cycle is very different in that, I feel like a lot of the crypto stuff, yeah, it's still happening. People are building isolated projects out there, but like there's so much more attention, and Bitcoin's drawing so much more of the attention back, that I would say like it did in the pre kind of 2017 ICO days. And to see people building projects out like this, you know, whether it's in DeFi or, smart contracts on other blockchains. Yeah, it's like that's not where I'd love all this stuff to live, but to see at least people poking in and around the Bitcoin ecosystem is bullish. And Sailor's got bills to pay. He's trying to attract all types of investors and investments. He's got relationships with people at various who are working on various crypto projects. So I mean, like I can't fault the guy. He retweets a lot. He's on Twitter a lot. There's a lot he has to filter, and we've all probably retweeted or on something that maybe we've regretted. Like you said, Soleil, you traded in and out of Ethereum, for years, and it's like that's a learning experience. So I think even to Sailor, like who's like the godfather of Bitcoin treasuries, like he's constantly learning too in real time, and I think that's been one of the impressive things is to kind of see the humility that he's had, the ability for him and the team to be so nimble, to change gears, to listen to the marketplace. So, yeah, it's like
Yeah, I I think that they can just cut the DeFi people out. I don't think we need them. Like Fidelity's got a product. I mentioned it a couple of weeks ago on True North, but Fidelity's got a product. My son actually sent me a message, and he ran it all through Perplexity, and he's like, "What does this sound like to you?" And it was some kind of like checking account that they have, and their deposits are automatically swept into some mutual fund that they have, and you can literally just pay your bills. You get a debit card, and you can write checks and all of that good stuff. And I thought, well, Strive needs to just take their lunch money because like SATA is going to be way better than whatever BS mutual fund they have at Fidelity. So I don't think we need the stable coins. I don't think there's any reason to like just put ourselves at risk and even be like shitcoin adjacent. I think that, and it's not that I'm a big fan of the banks, but I think for the most part, nobody really complains that they have to have a checking account, right? But if your checking account could earn you 11, 12, 13%, it's not risk free like FDI and FDIC insured deposits are. But, products like those where we just skip DeFi entirely and have some kind of products with the banks and these prefs, I think is way more uh, bullish and attractive and palatable to a toxic Bitcoin maxi like myself.
yeah, I think the addressable market is so much bigger. Certainly, interfacing with banking institutions, but I just think these products need to season so much more before banks are going to white label it or, do some sort of partnership with a company like Strategy, like Strive, and thinking, if you're a Bitcoin treasury company out there who's got a smaller balance sheet, like you said, Strive had to hit like a critical mass of their Bitcoin stack size before they could realistically go to market with their pref. If you've got 3, 4, 5, 6,000 Bitcoin, you kind of need some liquidity and some bid on your pref to get going. And like it or not, I don't think the market appetite is there for, to fund the nth Bitcoin treasury pref, but they're going to do it, right? Because
Mm-hmm.
because it's worked for SATA, it's worked for Strategy. And I think there's certainly room for more of these products. Um, so like if you're one of those companies trying to jumpstart liquidity on your stock, like it makes sense. Go to the fastest horse, go to the 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 squeaky wheel, and that right now that is DeFi because like um people in the DeFi ecosystem who are trying to seek yield on stable coins. Again, I don't pretend to understand that space. I'm not trading in and out of there a lot, but there's it just seems like that's where some of the initial demand is coming from. So I think it makes sense for that to be a starting place for some of these companies. And maybe, like you said, maybe that's not where this all ends up, because the fact is the crypto markets are much smaller compared to a Fidelity or a brokerage account, and you've got these there's these regulatory moats where Strive can't go direct to consumer and be a bank. There's a lot of expense. Maybe that is something that's possible in the future, and AI
I was
can
about
help
to say
solve some
that.
of those tools. Like I want that. I want to see that happen. We've talked about Strategy being the Bitcoin bank forever, and
Exactly.
yeah, like I think that's realistic if it's something that Saylor wants to pursue. It's just the regulatory mode is so much right now, the cost of it, the risk of getting into, more traditional finance and marrying that with a Bitcoin stack is something probably Saylor doesn't want to touch right now. Certainly Strive doesn't want to touch it right now. And
Tyler, I'll just add, um, from the conversations that I'm having with these Bitcoin treasury executives over the next, call it 6 to 12 months, um, I think you'll see DeFi and the crypto rails, um, accelerate maybe faster than traditional finance for some obvious reasons. But in particular, tokenizing these digital credit products are obviously going to take them global, specifically to Greater Asia, and you're going to see them across probably 12 to 14 different crypto rails. And the position of some of these executives, which I share this opinion and positioning on it, is it's good for Bitcoin to have those rails. It's good for the digital credit to have those rails. It doesn't necessarily, it's a rail. It doesn't not necessarily increase the utility or does not increase the value rather of those crypto rails. But if we can work to export it to Greater Asia and across the globe, great. So that's what I think you'll see over the next 6 months, basically throughout the rest of the year.
Yeah, and I
Yeah,
think
what you said, Tyler, about the everybody says the strategy is going to be a Bitcoin bank one day anyway, and so if the banks don't want to play ball, they can just get disrupted as well, right? I would not put it past, like, Strive might be a little too small, right, for someone like Fidelity or anybody else to say, oh yeah, we're going to partner with you to do something like Fidelity's product. Plus, Fidelity wants to market their own product, right? But I wouldn't put it past these guys to just start their own banks. Everybody who can be disrupted that doesn't play ball with Bitcoin is getting wrecked. So it wouldn't surprise me, and we can bookmark this, that at some point, you know, Strive and maybe Strategy starts taking these guys lunch money with products like that.
yeah, totally. Like, I think the scale is just something that it's like hurry up and wait, right? Like Fidelity's money market funds, I think, are close to $1 trillion in assets. So of course there's like no liquidity concerns there. There's
Yeah.
complete comfort that they can create these sweep accounts with overnight
So that's
sweeps.
another hurdle.
It is.
Basically, like, like the minimum Bitcoin that Strive needed in order to offer prefs, there's probably going to be another Bitcoin hurdle to, okay, now we can offer whatever you said, $1 trillion worth of liquidity to banking
Yeah, and maybe that means
products.
it's a 5x or 10x for Bitcoin. Strategy. Saylor's going to accumulate as much Bitcoin as he can. He's going to get to 1 million Bitcoin probably this year, but there is a
Hmm.
ceiling, right? It is going to be. It's like a logarithmic kind of curve or asymptotic curve that he's going to hit, where he's not
Yep.
going to be able to acquire that much more Bitcoin eventually. It's still the gold rush days, but Bitcoin's total market just probably needs a 5 or 10x, which we all want to happen tomorrow, but realistically could take a couple cycles. So yeah, I think the liquidity is like just like a reason that strategy's not focusing on that. Saylor said, we're laser focused on digital credit right now, and I can't blame him. And to Tim's point about tokenization that's happening, traditional finance isn't catching up with the internet still. Like, there's been a lot
Mm.
of improvements to trading of stocks. You can trade in more jurisdictions. We've got platforms like Robinhood, and even like the Fidelities and Schwabs, now are more democratized, and like so many more people have brokerage accounts today than they did in 1999, during the dot-com wave. But there's still like limited access to every financial product you'd want. Especially, we don't see this as much in the US, but if you're in the Vietnam and you've got some cash and you want to play around in a brokerage account, it's a much bigger lift, right, to get access. So
Hmm.
of course people are building these things through other crypto rails and wherever they can to get around the regulatory hurdles that are there. If your BlackRocks or your brokerages like Charles Schwab aren't going to move, if there's regulations for U.S. equities, someone's going to make it tradable in some other jurisdiction. And yeah, there's more risk, but I mean, with any disruption, that I think more risk comes. And yes, it's like I wish there weren't other tokens that were sucking any of the other air out of this thing, or like it didn't rely on people buying Ethereum for the Ethereum network to work, or buying Solana's token, for their network to work. But that's just kind of the reality. And Bitcoin's really not the platform yet. Maybe there's upgrades in the future where it can kind of host some of these things natively, and we hope. I think all of the financial ecosystem moves to Bitcoin as much as possible. But yeah, that's kind of my position on the whole thing.
Yeah, I hope all of those. I hope Bitcoin. Well, when you say natively, do you mean on the base layer? Because I hope that doesn't happen.
No, on like a
I
second,
hope they
like
just
on
build
some
it like
sort of
layer 2,
a layer 2 side chain that
Lightning, but for yeah, I like that idea.
Yeah, where you can lock in and out. And that's a lot of that stuff already happens on layer 2s on like Ethereum and all that. Again, I'm not the expert on on Ethereum or any other crypto token. It's just like we want people building on Bitcoin in some way. So yeah, I'm bullish on
Actually,
all
you know
that.
what's it's funny, the ones where Saylor would always talk about like, oh, Katy Perry should have Katy token or something, like that's actually kind of not a bad idea. Like that's the only shit coins that I can actually get behind, because like if that gives you some kind of preference for her concert tickets or some kind of fan event or something, like at least there's value being like offered and exchanged. But like scam coins that are just designed to rug are obvious, just annoy me and rub me the wrong way. But eventually, if every celebrity's got their own token and it's as version of their fan club, like I don't know, that's kind of okay.
All right, so you're pro DJT coin,
Yeah,
big DJT
exactly.
coin fan. All right, great.
MAGA token.
Love it, guys. Hey, thanks for like running down memory lane on the whole True North origin story there. We'll have to dig into it from time to time. Thanks so much to both Tim, Soleil for joining the stream today. Thanks for hopping in, guys. Looking at the broader kind of capital markets environment, running through Stretch, SATA. Exciting things are happening in Bitcoin and digital credit and Bitcoin treasuries. And we're just we're hurry up and waiting around here for the next Bitcoin bull market, so that we have even more to talk about. It's going to be exciting stuff. But I'll leave it there. Make sure you give Soleil, Tim Kotzman a follow on X if you don't already. If you're watching this and you're not following those guys, I question your life choices. But this has been the BitcoinTreasuries.net stream. We'll see you next time.